Morning, everyone. Can you guys hear me? Can you just let me know if you can hear me? Just want to make sure the sound's coming through. Okay, cool. Hey, Zanetta, good morning to you. All right, thanks, guys. Welcome to the morning market review. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is r@fxcm.com, and today is Tuesday, the 29th. I'm just going to bring up our market commentaries disclaimer. So just wanted to kind of let you guys know I'm sort of somebody very close to me has passed, so I'm kind of like a little bit all over the show. The funeral's tomorrow, so there won't be a webinar tomorrow, and yesterday I was kind of all over the show, but just wanted to say I'm a little bit sort of higgledy-piggledy this week. I'm begging your pardon. All right, here's our references. And we'll use market scope. I'll go through the CNBC morning note. I don't think we'll use trading view, but we'll see. Thank you, Anna. Much appreciated. Thank you very much. Let's just go through the CNBC note, and let's see what it says here. All right, so European markets head for higher open ahead of Ukraine-Russia talks. Okay, let's get through the article here. European stocks are expected to build on gains from the previous day, opening higher on Tuesday ahead of another round of Ukraine-Russia talks. The higher open expected in Europe comes as investors in the region remain focused on developments in Russia's invasion of Ukraine. Face-to-face talks between the two sides are set to continue this week, with delegations from both countries traveling to Turkey as talks resume today. Ukrainian officials said they would not be opening any humanitarian corridors Monday to allow the evacuation of civilians, in light of intelligence that suggested Russian forces may be planning an attack on the evacuation routes. Elsewhere, US stocks struggled for direction on Monday as investors took a pause following 2 straight weeks of gain. Okay, so we need to talk about that. Traders are awaiting a series of key economic reports while also keeping a close eye on the Federal Reserve's planned interest rate hikes. Data releases in the US this week include job openings and labor turnover surveys on Tuesday, as well as the ADP, and then Friday we're getting the jobs report, and we'll do a live trade there. CNBC's coverage of the Atlantic Council Global Energy Forum continues on Tuesday, and CNBC will be hosting panels with key business leaders. Okay, so I think that if anybody wants to keep abreast of that, it will be on the CNBC channel. On Monday, the UAE's energy minister told CNBC at the forum that Russia will always be a part of OPEC Plus, even as governments shun Moscow over the war in Ukraine. The Bank of England publishes its latest quarterly bulletin Tuesday. There are no major earnings today. All right, so that brings us to the charts. Let's take a look, see if we can make some sense of. All right, so actually starting off with Bitcoin, funnily enough, and Bitcoin's actually moved into uptrend. Okay, and I'm busy preparing the quarter report. We're doing our second quarter report, and I'm behind, but nevertheless I'm pretty close to finishing. And this is a fascinating chart here. Bitcoin on a weekly has now got a higher trough followed by a higher peak, and it's not good enough for us just to recognize that it looks as if Bitcoin is outperforming the US dollar. I think we've got to try and come up with some sort of coherent reason why that may be the case, and if we are correct in our reasoning, we can follow the development, I think, with a lot more confidence. I'll come back to Bitcoin in a moment. Let's just bring up gold as well. All right, so gold is also in uptrend. Okay, it's got a positive sloping. This is a 52-week moving average, and if we had to put in our peaks and troughs here, just to put these in, I think it's important. So let's just put in a trough, and we'll put in a peak over here. Once we've got our references in, you can already see here is going to be the higher trough, and this is going to be the higher peak. Okay, and of course the question is now, are we going to get another higher trough here? The gold market is at the moment very indecisive. And I think this is going to have an effect. My feeling is going to have an effect on Bitcoin. Let's just take a look at, so we've got Bitcoin in uptrend, we've got gold in uptrend. Let's just take a look at the US dollar as well. Okay, it's in uptrend too. So this is now it's a strange intermarket relationships here. We're just going to explore that in a little bit more detail, and then we'll take a look at the DAX. Trough, peak. Okay. Here is the higher trough over here. And here is the higher peak. Okay. So it's in uptrend. So this is bizarre. So why am I saying it's bizarre? Is as follows. Let me just bring this up. One moment. Trying to bring up my Microsoft Paint. Here it comes. All right. So we've got some weird things happening in my mind mathematically. It's bizarre. So we've got three instruments that we've just looked at here. So we've got one. We've looked at Bitcoin. Let's write it out. Bitcoin to the US dollar. That's effectively our measurement, right? And Bitcoin is showing outperformance there. Okay. The next thing, we've got gold to the US dollar, and gold is showing outperformance there. And then we've got three. We've got the US dollar moving up as well. So all three of these are moving up, but it's implying that Bitcoin is moving up faster than the US dollar. It's implying gold is moving up faster than the US dollar, even though the US dollar is moving up. Now, the question is, well, why? You know, it seems that there needs to be a reason that Bitcoin's outperforming US dollar. There needs to be a reason that gold's outperforming the US dollar, even though the US dollar is positive. And I think it's coming down to something that we've discussed before. This is very much a part of the Q2 report, and there's a tug of war, right? So I think on the left side we've got the stagflation. Okay, stagflation. And on the other side we've got the Fed's capability of being aggressive. There's no doubt that they have to tighten policy. Okay, there's no doubt they have to tighten policy. The question is, how aggressive can they be? Because they have communicated to the market that they're going to be aggressive, that there's going to be 6 rate hikes. The next one is probably going to be 50 basis points. Well, that's what's being communicated. And I think the Fed's capability, the Fed's raising interest rates is why we're getting a positive US dollar here. I think that's one of the reasons. They're also going to look to run off the balance sheet. But this threat of stagflation may be suggesting that the market views that the Fed is being too optimistic in terms of how hawkish they can be. So I think there is going to be a tightening. I'm not sure we're going to get those 6, and I'm not sure we're going to get that 50. Now, we may, but I think what this is basically saying is that if the Fed does pursue its aggressive hiking policy, that it's actually going to usher in recession. I think it actually ushers in recession, and so the market's starting to look for alternatives, particularly gold, and all of a sudden Bitcoin has now come back on the radar, which to me at the moment suggests, and again subject to correction, is that as soon as the market changes its expectations with regards to the US dollar, Bitcoin becomes a key instrument. I think that's what we're seeing here. So whether we get the stagflationary environment is still, I think there's a question how serious it's going to be. Also, I would suggest that the chances of stagflation, unfortunately, are much higher in Europe than the US. I think the US is insulated to some degree, but this is a real bugbear at the moment, and I think that's what's been reflected in numbers 1 and 2, even though 3 is moving up. Let's just take a look at the DAX. All right, so this is an interesting chart to me because I don't know if we have bottomed here or not. This has got to go the way of Bitcoin. Ultimately, if we want to be more bullish on DAX, we want this type of a pattern. Just going back to Bitcoin, we want to see the higher trough followed by the higher peak. You see, at this stage of Bitcoin, there was, at least in my mind, still a concern that this was some sort of bear market rally. In other words, if you were buying Bitcoin here, would it fall below the previous trough? And then the fact that it's now made the higher trough, higher peak, actually makes me much more comfortable in terms of, there does seem to be some sort of accumulation. But when we take a look at DAX, we can't really make that assessment just yet. It certainly may be that we're getting a pullback and then would move up like that. This type of a pattern to me would be, quite a welcome sight. However, I think that there's still a tremendous amount of pressure on equities. I think that stagflation in of itself is on everyone's mind. There's already been some sort of adjustment, at least in the UK, and I think I saw it being debated in Parliament yesterday. We kind of get the Sky News parliamentary debates. One of the companies there, and I actually don't have the full news story, but you guys probably know it better than I do, have let 800 people go, and they're calling it illegal. And it very may well be. I mean, I'm not arguing one way or the other if it is or it isn't, but the point is that kind of an adjustment, if you just sort of willy-nilly are letting 800 staff go, to me, well, that is an effect of a stagflationary effect. It means that in order to control margins, you start cutting down on your variable costs. So Anna said that's the cross-channel ferry that this has happened, Thank you, Anna. So let's see if there's other stories like that. Let's also see if there is progress in these talks. There are, I think, two very important charts to keep on top of. The first one is oil. Okay, so this again is a very dangerous looking chart to me, because there is a potential here for higher oil prices. Okay, on a technical basis, here's the lowest low in at least 3 candles, and last week we had the condition 2-3. That's your swing low. That means that we've got the platform for higher prices. So if the supply shocks continue, oil prices continue, stagflation becomes more probable, then we probably see gold benefit. And dare I say, maybe Bitcoin is now in the crosshairs for that as well. So we have to keep an eye on that. The other chart that we need to keep our eye on would be wheat. Let me just bring that in. And we'll just use those two as, let's take the Q out. We'll use those two as the proxies for our supply side inputs. So let's just bring in wheat. All right, and here, well, let's just see if how we're going to label this. Let's keep it as strict as possible. I think we would be well within our rights to go sort of peak, trough, trough, peak, higher trough, higher peak. I think we could. And then the question is this the next trough, and does that build into another peak? So I think that would be acceptable. If we have to do it as as strictly as possible, it would be like this. Would use this as the trough, this is the peak. This would be the next higher trough, and then you've got this big higher peak here, which I think is overbought, but then comes down. And again, if the supply shocks continue to exacerbate, then we kind of get the movement up here. Then that stagflationary scenario becomes even more probable. And just to kind of end off, I want to go back to the gold chart. Just waiting for my chart to stop hanging. Okay, there we go. All right, let's just bring up gold once more. And I think this over here is the debates happening here. These candles here. These are inside days. So we had gold taken up furiously, only to be sold down. And now the market's questioning, was this sold down? I mean, are we at equilibrium? Should equilibrium be higher than 2000? Market's a little confused on that. And I would suggest that the higher this goes, the closer we get to that sort of stagflationary environment. So let's just keep an eye on that. All right, at this point, I'll invite any questions. Just want to remind, tomorrow there won't be a webinar, but we will have one back on Thursday. All right, nothing coming through. So let's conclude here. Yeah. Peter's just asking, is the yen still a sell? Let's take a look. Let's take a look. So I think let's put in a RI here. Peter, I would suggest it's looking quite frothy overboard. So let's just bring that in. Yeah, so I think the monetary policy difference between the Fed and the Bank of Japan necessarily means that dollar appreciates against Japanese yen over time. Perhaps at this stage it's worth just waiting for some sort of risk-adjusted opportunity, hoping that it sort of comes in. This looks to me a little toppy, and you can already see getting some sort of really get some sort of selling tail there. Yeah, okay, Chris, thank you very much. Much appreciated. All right, guys. Let us, thank you, Anna. Let's wrap up here, and we'll catch up Thursday morning. Thanks very much, guys.